So what's going on, everybody? Welcome to day 4 of Masterclass 5.0, the 2CT. We're going to be going over 1 hour and 5-minute entries. Pretty simple, guys. Nothing special. Well, it is special, but nothing too complicated, should I say. Very similar to the 4H and 15-minute approach. Just remember, though, when you start getting down to the hourly time frame, you're going to have tons more opportunities. Now, it does slightly get a little bit easier as you scale down to the hourly time frame. And I don't want any of you to think that, you know what, the 4H isn't good. The 4H is absolutely fantastic because you get to take advantage of the full 4H range. Now, the only difference on the hourly is that you don't get to take advantage of the full hourly range. So let's say this candle has gone bearish. Let's take a look at this one, actually, current candle. That's the range of this candle. When you go down to the 15-minute, you get to take advantage of a breakdown of 4 candles versus a single candle on the hourly time frame. So one thing you want to be doing on the hourly time frame versus what you do on the 15-minute, where you get more opportunities, is you want to be making sure that you're seeing the candles predominantly stand out. There's one thing that you want to keep in the back of your mind is that the 4H candle is open for 4 hours. If you see that the market has been pushing decently for a very good period of time, and let's say now you decide to enter late into the 4H candle, there's a very good chance that you're not going to get enough range back to the upside or downside to continue on that move. So the best thing to do is always look, as a hourly 5-minute trader, always look for trades where you start to see breakouts of levels in the market. This is a really good indicator that the market is going to start pushing in your direction. You don't necessarily need the breakout, but you can also see strong volume candles within ranges. And if you start to see those moves transitioning down to the lower time frame, breaking out of these levels and creating those kind of retests or those 5-minute entries, then these are fantastic trades to take apart, to be a part of. Now, again, I'll make it very clear to you. It is going to take practice. It is not going to give you a 90% win rate. You know, you need to make sure that you're taking a decent amount of trades in all on as many pairs as you're comfortable trading, and during as many different sessions as you can possibly trade to figure out which sessions are working for you, what pairs are working for you at what times. Okay. When I share this, you know, what I'm sharing with you this week, I know everybody's excited. I know everybody's doing pretty well with it. I know people are getting great results. I want to just make sure that we drive this home. Please focus on the process and the fundamental principles that we're talking about, and then start going ham. Don't just start going ham now and trying to get into trades left, right, and center, because there will be trades that you're going to lose over and over again just for the sake of losing them because you think the next candle is going to be bearish. What do I mean by that? Make sure you're checking your higher time. Make sure you're checking your correlations. Let's say in an instance like this candle closed bearish at 1 o'clock. We want to be making sure that we go down to pound JPY, and we want to start seeing that same sentiment around the same time. Okay. What else? I was on such a good chain of thought there. Checking your correlations, making sure you're identifying your currency strengths and weaknesses, and making sure that the candle that you plan to take a trade after is falling in line with the correlations that you find on the confluences that you find on the other pairs related to the pair that you want to trade. Okay. Pretty self-explanatory, I guess. Do I care about the 4H candle? No, I don't. When I'm trading the 1 hour, I don't. But it is just logical that you say to yourself, well, hold on a minute. You know, this is a very strong push phase in this 4H candle. Would I be inclined to jump into a sell here and check the 4H and see that the 4H, oh, okay, that candle just closed, new candle's open, makes sense. But let's just say this candle wasn't here, right? This one, would it be wise to be jumping into an hourly sell after the range of this 4H candle was pushed? One thing that you always got to remember is that candles have their ranges. I don't know how much the range is. I just look at it as an average when I look at the charts. But if it's pushed a lot, you haven't got into the best move. And I say this over and over again, so I hope it rings bells in your head. But if it's pushed a lot, then there's a chance that you're not going to get into the best trade, okay? So does anybody have any questions on what I just said? I mean, I think I say this every time we jump on the session this week, but Yeah.
Yeah, Rox, I have a question. Morning.
Morning.
Yeah, well, it's morning where I'm at. It might be afternoon where you are. Um, yeah, I have a question. What if you're working with two time frames, let's say the 15-minute and the 3-minute? Um, how do you look at like what's going on the 1 hour
No.
at all? Like, or you don't?
No. I'm just going to do the
I'm not,
exact same thing, but we're going to be talking about 15-minute tomorrow, right? But if I'm looking at the 15-minute, I'm just doing the exact same thing. So let's say I'm on the 15-minute and I can see here around 115, the candle slows bearish, sentiment starting to change bearish. It feels good for sales. I want to go over to GJ and just make sure I'm feeling that same sentiment in the market. Seeing the pressure moving to the downside, previous candle closing bearish, identifying here dollar strength, making sure that this is going bearish around the same time. This is going bullish around the same time. All I'm trying to do, okay, all I'm trying to do is identify that there is volume in the markets when I plan to take a trade.
okay.
So if I can see that around this time that I want to take the trade, let's say I start marking it up, I'll probably take a low here, middle and a high here, stuff like that, right? So that is the 130 close. I want to see that dollar is strong and pound is strong. So, weak. So at the time I can see pound is showing signs of weakness here around the same time. You can see that there's strong bearish candle closed. This is indicating pound weakness and dollar strength. So I want to see New Zealand dollar starting to push bearish. We're failing to break the highs, not enough yet. We want to see this start pushing bullish around 115, which it is. We want to start seeing this pushing bullish around 115. It wasn't at the time. We can take a look at another one. Let's say we want to see this pushing bearish around 115, and it is. So what that means is that we can identify that there is volume stepping into the markets. Once we have that volume stepping into the markets, let's say we go down to the 3-minute time frame. What we're then doing is we're then just trying to identify the areas in the market where price is saying to us, well, look, the sentiment is continuing to push bearish. We see this nice wick rejection, bearish candle close. Does this line up with our high time frame sentiment, which is from the 15-minute? And does it line up with the sentiment that we're getting, which is USD strength, pound weakness? And we are. So you'll say to yourself, okay, cool. This is enough information here to say to me, well, look, the previous 15-minute candle close. We've got a nice area in the market where price is creating wick rejections, continuing to indicate that bearish sentiment to us. We're not breaking above structures. We've closed bearish. And then we say, look, if price breaks below this area here in the market, I want to be triggered into the trade. Or you might be sitting here and you say to yourself, well, look, I don't want to be triggered in immediately because that's not the type of trader that I am. I want to wait for the next 3-minute candle to open to create a top wick. Create a top wick. And then after create the top wick, I'll press the sell stop entry. There you go. So well, okay, maybe not. But let's just say in an instance it did, you get the top wick and then you're looking for the trigger and then you just take the trade, bro. All you're relying on at this stage is for that previous candle to close bearish and the next candle to close bearish in line with the sentiment of the market. And that is it, man. That is just how simple it is. You do not need to be looking at your higher time frame analysis. You could get confused. And there are a lot of times when you're going to be trading the hourly time frame, let's say, where the markets have pushed really strong bullish to the upside. Don't quote me on this, but let me just explain this. And what you start to see is that the 4H candles push bullish. It starts to consolidate around this area because it's bouncing up and down, bouncing up and down. I doubt it very much, guys, but just work with me on this, please. Just work with me, okay? And then what happens, it starts to retrace its own body, all right? After retracing its own body, this is what it leaves behind, a bearish candle. Now, if you look at the 4H time frame, the 4H candle is going to be what? Bullish. The 1 hour candle is going to be bearish. You're not going to take that trade. And then what you're going to start doing is storytelling and saying, well, that candle's bullish. I can't take sells because there's a high chance that it will continue bullish. What you're relying on is not the fact that the 4H is bullish. You're relying on the fact that this candle is closed bearish strong previous to the previous candles. And with the correlation or the confluences that you're gathering, from the other time frames around the same time, there is a strong sentiment that the pound is weak and dollar is strong. And then all you're doing once you do that is you're trying to then just justify why you're going to get into this trade based on everything that you've just lined up And then after scaling down to a 5-minute time frame, making sense of what's happening. So now we've got the evidence. We now start to build the story. We can see that there's a strong, sharp move to the downside, multiple wick rejections in the market. We have an area in the market where the previous 1 hour candle closed bearish. And now you're looking signs for that continued bearish sentiment, multiple wick rejections, bearish candle close, doesn't matter where you enter here. And you're basically just saying, if I enter here or enter here and price starts to push in that direction, then there's a very high chance that it will continue down based on the fact that the previous 1 hour candle closed bearish, the next candle will close bearish. And as you can see in this instant, this is what's happened. And that is all we're doing. Does this make sense?
Yeah, just one quick question. The red line that you have, that's where the 15-minute begins?
No, that was the red line like this.
Yeah.
No, that's where the previous hourly candle just closed.
Oh, okay, okay.
So the hourly candle closed here. So did you watch yesterday's video? Anything to the left, we're not concerned about. This is where we gathered our evidence. We built our story before we came down. And then all we're focusing on is the information to the left. Doesn't matter how messy it is to the right. We're just focusing on this information to the left. Oh, okay. On the right. I spoke about this in yesterday's video. I'm not sure if you watched it. Okay, cool. So does anybody have any questions on this, or do you all understand it? For strength, do you look at the last 1 hour candle across? Yes, I do. For strength, David, I look at the last candle across all pairs, across a couple of pairs. Remember, guys, you will only want to trade market conditions when the market conditions are lining up in sync. If this closes bearish at 12 o'clock, we want to see that pound JPY is also doing the same to indicate here that what? Why does this seem weird? Oh, that's 12 o'clock. That's why it seemed weird. You want to see that the candle around the same time is doing the exact same thing. Why? Because now you have a very, very good understanding that the pound is weak and that the sentiment is changing. And the most important thing at the time is that there is volume stepping into the markets. Cannot stress this enough, man. If you do not see a sync on your hourly time frame, stay out. You see me do this on the 4H. If I see euros pushing bullish, and this is, well, I mean, look here. So this was the close. I think this was news, guys, by the way. I'm almost sure it was news. But this was the close at 12 o'clock. Okay, cool. News, whatever. Who cares, right? But I want to take a sell based on euro weakness. I need to see it 12 o'clock. Bam. There's your money. Do you understand? 12 o'clock close. 12 o'clock close. We have the confirmation here. What's this? 12 o'clock close. Do you understand, guys? And now we have the market in sync. And we also, it was definitely news. And we also identify what? Volume, volume, volume. Let's take a look at this one. This was at 3 o'clock on the 13th of April. 3 o'clock, 13th of April. Three o'clock, 13th of April. Bam. Now we're in sync. Okay. Now you have opportunities in the market. Wherever the other one is, whatever. Do you understand? Rox, what about the 10 o'clock bearish candle on GU? Would you consider to scale down and search for sells? Let's study that. GU. Bearish candle at 10 o'clock. GU. Bearish candle on GU, 10 o'clock. No, I'm not trading that ever. I need price. Come on, I know it's a simple question, but I'm just saying, we just need to use some logic here. There is no volume, no momentum. There's no story being told. There's no indication that it's going to go up or down. Nothing is happening. In a situation like this, logically, you just want to see price break out to the upside or downside, confirm that sentiment, identify the strengths and weaknesses, and then mark your your low, mid, and high level, and that's it. You're welcome. Rox, 1 hour, 5 minute example. Please want to hear your rhythm. Sure. So let's take a random pair. This is decent, actually. Let's see what's happening here with New Zealand dollar. So we have a bearish sentiment. We have close, mid, and high of this range. We're identifying USD strength. So that must be bullish. That must be bullish. That will do. New Zealand dollar weakness. That must be going down. Fine. Then we identify the bearish sentiment, previous candle close. We're looking for the 50% retracement on this candle. So we're looking for an area in the market where that candle's just closed, which is the hourly. This one, you're looking for the wick to be formed or an area in the market for price to indicate that the price is trading below the 50% and within the range. And you're looking for an indication of bearish behavior or something like this. And then you're looking to execute your trade like this. So let me just go over this one more time for you, right? On the left, what is this information?
Irrelevant.
It's irrelevant. It's noise. But in the back of our mind, we know that this information is what? A bearish candle close. That's all it is, guys. Just a bearish candle close. When we start looking at the right, what are we looking for? We're looking for price to trade below the 50% level. We're looking for bearish engulfing candles, wick rejections. Hey, let's make this a wick rejection. Wick rejections or indecision candles. Once we have this information anywhere in this area and we feel comfortable enough, then we can start looking for our sell-stop entries, because our belief system is that what we see here, which is the previous bearish close to the left, will eventually happen at. Hey, my sensitivity on my mouse is messing me up, boy. Damn it. Over here. That's it. That's all we're focused on. After this bearish candle close, this candle will close bearish. What do we have to do now? Add the what have we done pre this entry? Well, we've done our pre-analysis. So from an hourly perspective, previous candle close bearish, indicating what? USD strength. Is New Zealand dollar weak? If so, then we want to see the previous candle closing. We want to see the current candle pushing bearish, preferably the previous candle closing bearish, but it doesn't matter at this time. We want to see USD CAD pushing bullish. USD pushing bullish, USD pushing bullish. That's enough information. We jump into the trade. Bam! Voila! Now, listen, yeah, I'm not saying that you would have taken this entry because this is an immediate candle close, immediate movement to the downside, right? So the criteria that I kind of look for is everything here. And then I'm looking for maybe a wick to form, maybe a wick to form off of this candle so I can set myself stop below this area for it to break. Or I'm looking for price to pull back into this area to create some sort of resistance, or I'm looking for support to form within this area so that if the momentum shifts, I know that if it breaks this low, remember the rule of thumb, if price breaks this low, there's a high chance it will continue bearish. And that's all I'm doing. Okay. Now I can give you every single scenario, but it's not going to do you any good. Remember what I said, just get on the charts, action this, try it out. And I mean, look here, like, I know we didn't take this trade, but look here, previous candle closed bearish. We identified what we needed. Wick was formed. Look at the next candle bearish. Like, we just can't deny that this is just going to happen every day. You just got to enjoy this process, execute as many trades as you can, be selective, practice identifying when there's volume and not. And then, you know, with experience, you become better at this. Do you like to wait a certain period of time minimum for the wick to form? No, none of that. Forget about that, guys. Forget about how long the wick forms. Forget about all of that. Just Just focus on this. What you don't want to do is become a storyteller and start asking too many questions or thinking about too many scenarios. Focus on the left, get your bias. Go to the right, figure out when you're going to enter if given the evidence. All we're thinking about is that this candle is going to close bearish after you've gathered your everything that you needed from this side. Okay. Let's take a look at another example. Let's see what's happened here. This is a good example. Pretty tricky, this one, actually. Right. Now, this is a great example. Yeah, this is a fantastic example. Now, if I wanted to take a buy after this candle closed, can I do it?
Yes.
Anybody else?
Yes.
Okay.
Yeah.
If we're focusing on the 4H, what is happening over here? This candle is what?
Retracing its own body.
Well, it was bearish at the time, right? It was bearish at the time. If you distract, so you're going to have to make a decision. Do I focus on the 4H with the 1H, or do I just focus on the 1H with the 5 minute? I would recommend you focus on 1H with the 5 minute only. Okay, because at the time this candle closes bullish, the current 4H candle is bearish. So you're not going to get a great sentiment from that. I personally at this time would say, right, this is 12 o'clock, Aussie dollar CAD, 1 hour time frame. Okay, we've got a bullish close here at the same time. Okay, so we've got indecision here. So now what I say to myself is, I see Aussie dollar getting weaker. Is it the fact that CAD is getting stronger? This must be going bullish. This must be going bearish. Tough one, this one. Very tough one, this one. Aussie dollar strength, this must be going bearish. Okay, not too bad, I guess. We've got a couple confluences here. This is a bit of a tricky one. You'd have to make an informed decision yourself whether you enter this or not. But the point is, this is a great example. If you're taking this based on just the hourly observation that this candle's closed bullish, you also need to think logically about what's happening after doing your analysis here. We have a strong push phase in the market, strong bullish candle. We went bearish first. We attempted to close bearish and failed. Is there a high chance now that we continue to retrace? Very similar to the gold trade we took live this morning. If that is the analysis that you come up with, or the kind of thesis that you've gathered, then you can take the trade. What I would do, yes.
Question. You're on AUD CAD, right? And like the candle that you mark the 3 lines on, right? That shows that AUD is weak, right? Because it's pushing bullish.
And that shows AUD is strong.
Yeah, it shows that AUD is strong. And when you go on AUD JPY, it shows that it's strong as well, right? And the other period.
Yeah, strong. And this is not strong, only because of USD strength.
And what about Euro AUD?
Oh yeah, there you go. Well, there's your evidence. You got it, bro. You've wrapped this up. You've wrapped this up nicely.
So when you go to AUD USD and it shows that USD is stronger than AUD, right?
Yeah.
Couldn't I like go to other peers and just make sure that USD was the strong one?
Yeah, but I know USD strong because we've already looked over it. So that's why I just let that one go. I was like, that's why I said I'm not worried about this one. But nice. I do just want to double confirm it. That's a good point, your Aussie dollar. So then there you go. That is your confirmation there, right?
Very nice.
Good analysis, bro. Well done. So now, when we go down, so now what we're doing at this stage, right, is I wonder if this works because it's maybe save time if I do this. Oh, it really does work. No, it doesn't work. Yes?
I have a question. Like just now, Aussie CAD. Like Aussie CAD just now. Okay, which candle just now you said? Give some sample. Just now Aussie CAD, is it?
This is Aussie CAD.
Aussie CAD. Then the last candle, the last green candle. Is it this chart?
Yeah, this on the red line.
Okay. 50 minute.
Yeah.
Go to 50 minute. Okay. 50-minute chart. Okay. The last green candle. Okay, the last green candle. Okay, let's say this candle, last green candle. Okay, the line here. Okay, currently, okay, on the currently this candle, OZ was weakened. So we see this green candle. Can we still take it by?
Yeah, because I'm not looking at the 15-minute, bro. I'm doing the 1 hour and 5 minutes.
Oh, okay. I mean 15 minute, 1 minute.
No. We'll do 15 minutes tomorrow, but I'm doing 1 hour today.
Okay.
This is
okay.
Evans. This is a
Okay, for
solid,
1 hour.
This is a
Okay,
solid 1 hour candle, dude.
Okay, 1 hour candle. Okay, this is the last green candle, right?
Yes.
The first form, this green candle.
Correct.
Okay, I mean, okay, let's say, okay, this green candle is formed. Then the Aussie was weak. Aussie was
Strong.
Cat was strong. Cat was strong. Then Aussie was weak. But the chart is formed green candle, but we still can take it by.
Yeah, because the candle closed green. This is
The
called
market
the two
sentiment is showing cat was
strong.
strong. Yeah, cat was strong.
Yeah,
Market sentiment is showing cat was strong.
yeah, it was. Yeah, I know what you're saying. You're saying you're saying, would I look for a sell on this green candle?
No. Okay, I mean, how to?
Evans,
Okay.
let me
Okay,
just
let's say market sentiment now. Okay, before after. Okay. Let's say Aussie cat market sentiment is Aussie weaken. Okay, cat is strong, Aussie weak, but this green candle is formed. Okay, that means Aussie dollar is getting stronger.
correct. Yes.
Need market sentiment to be stronger, right?
Correct. Yes.
But we take it by, is it against the market?
Hell no.
Okay.
What
because
market?
1 hour is showing the Aussie is getting stronger and stronger.
Correct. Yes.
So we take buy. That means we against the market. Is it?
You're against the market, not me, mate. I told you anything to the left means nothing to us. Whatever happens here, bro, we're not trading this. The structure only forms when we get down to the 5 minute. This is structure.
Okay.
This is information.
All right.
Two candle theory is if this closes green, this candle goes green.
Okay.
Okay.
If market sentiment still showing Aussie weaken.
Aussie dollar strength.
No, I mean the first green candle.
First green candle means Aussie dollar strength.
Oh, okay.
Any candle that goes green on the left means that currency is strong. Any candle that goes red means that currency is strong.
Okay, I understand now. All right.
Okay.
Thank you, Rob. Thank you. I understand now.
Right. So we're looking at this. We've identified that Aussie dollar is strengthening. We've gathered our the sentiment in the market, our confluences, strengths and weaknesses, etc., etc. This candle closed bullish. We're ignoring the 4H because the 4H is bearish. But when we take this trade, we're not just taking this trade because this candle is green. We're saying, well, this is a very strong push phase. This candle's closed very strong bearish, which is an impulsive move here. There's a very high chance that it will retrace. If you haven't seen the live trader session this morning, go and watch it. We've done the exact same thing this morning and took a trade in gold. Once we have that information, we scale down. We isolate the area in the market where price is just closing an hourly candle, and then we're looking to take the trade on the next candle. Again, we have the area in the market where we have the 50% range, which is this information here. And as long as price trades above this and below this, and we get information within this area, we can take the trade. Okay. Now, if the market doesn't pull back and we see that the market is continuing to push bullish, can we take this trade?
Absolutely.
Very good. Absolutely, we can. Absolutely. What was the determining factor to take this trade without a retracement or wick rejection back into this area?
Strong breakout candle.
Very good. Beautiful. There is another thing as well.
That we know the next candle is going bullish.
Okay, that is what we've gathered this side.
I think it's just up to the person's risk appetite.
Very good.
They want to take it.
Very good. Very good. If you are looking at the markets and you can see at this time that the markets are moving, Aussie dollar is showing signs of strength, and you feel at this time that there is not going to be a pullback because the momentum is strong, the wick is small, price is pushing bullish, then you decide whether you take that trade. This is called what trade? Breakout.
Breakout
Yeah.
trade.
That
Yeah.
is it. Just your breakout trade. Where is the best area to take your breakout trade? Is it above this wick, or is it when this wick is formed and it turns green?
As soon as it turns green.
As soon as it turns green.
Very good. Either or, but obviously, as soon as it turns green gives you the better risk to reward. If you wait for the market to push up here, you're waiting for too much confirmation, but it's still a fantastic trade. If you wait for the market to break out and close and you want to take the trade, it's still a fantastic trade. Remember, we're trying to build a belief system that we've already gathered from the 1 hour time frame. This candle has just closed bullish. We are now anticipating this candle to do what? The next candle to do what? We're anticipating the next candle to get
Be
over
bullish.
there. Yep.
Yeah, Rocks. Sorry, I would have taken or put a buy stop just on top of where the lower high is on the left. On the left. The lower high on the left.
Lower high. Look at this, man.
Yeah, on the left there. Yeah, so I would have put a buy stop just above that candle, and then
This one.
Yeah.
Yeah, that's completely fine.
Yeah,
that's completely fine. Yeah. But remember, when we take this trade, and we said this, we need to have a belief system that if this candle creates a wick and starts turning green, that it's going to do what? Close green. Look here. This candle closed bearish. This candle closed bearish, created a wick. We need to have a belief system that what? This candle will do what? Close bearish. I'm not saying this is going to happen every time, but more often than not, it will. If we add the confluence that the previous hourly candle was bullish, we anticipate the next hourly candle to be bullish. We've identified Aussie dollar strength. We could take this trade. We don't have to wait for this.
And Rox, what if the candle, let's say that's solid, if it pushes down first and then it pushes up to make the top wick, do you leave that alone then?
If it does what?
Say like you're looking for the sell, so you want the top wick to form, but what if it forms a bottom wick and then pushes back up?
Yeah, well,
make the top wick.
Yeah, but then it's still the same thing. All you're going to be doing is waiting for the candle to flip again and go bearish.
Okay, cool.
I mean, look at this. All right, a little tip here for you guys. A little tip. If the market is in momentum, how does the candles tell us that it's in momentum?
This isn't it the size of it?
It's small wicks.
Yeah, very
Small
good.
wicks, big candles.
Very good. That is it. And you know why it creates a small wick? Because it has too much va-va-voom. It just cannot push higher. It just can't push higher. And this is a good indication. And I'm not saying there's times where there'll be bigger wicks, but this is a great indication. Aussie dollar CAD, 5 minute. So that's a breakout trade, okay? Let's take a look at another example. This is crazy. Right, let's take a look at another example. Let's take a look at USD Swiss franc. We spoke about this yesterday. Let's ask this question, actually. Let's say this candle closes bullish. And, I mean, I hope we don't get a trade. Oh, you definitely got a trade. Okay, let's say we didn't get a trade here. And this candle closes red. How do you take these buys?
Yeah, come up.
Can you?
Yes.
Okay.
Yeah, definitely take the buys because of the long wick.
Oh, no. This closed red. Forget this.
No.
By the way, By the way, I just checked the 5 minutes, and this was a ridiculously easy trade to take, ridiculously easy, based on the previous candle. But the fact that this closed red, can you take this buy?
If you
I'd say
stick
you
into
can
the
take it as a
principle,
breakout.
No.
if you stick into the principle last candle, take the direction, then no.
Good, yeah. You don't want to go against that principle, guys. You just don't, because that principle in itself creates so much discipline in your trading. It really does. And if you're not already in buys, then you don't want to jump into buys after this candle's closed bearish. Remain a disciplined trader, because it is going to serve you better in the long run to take trades when the principles that have been set out, you follow. Okay, this was an absolutely fantastic trade though. Looking here on the 5 minute time frame, on that 50% retracement, that's the candle close. You have indecision candles, whatever else. You might have been triggered into this and stopped out on this candle because this went bullish first, but let's just save the drama here, whatever. Let's just say you entered, let me just do it because I don't want anybody to come back to me. Let's say you took it on that breakout. Actually, do you know what? We don't even know if we were stopped out of that. Let's see this, because it might have gone red first before it went bearish. No, it didn't. It went bullish first. Bollocks. Anyway, whatever. Nice area in the market. Depends where you put your stop loss. You might survive that wick. You might have waited till after this wick. You might have waited for the breakout. It doesn't matter. But the point is, again, just to really continue to build this belief system. I mean, look at this. Just another great opportunity in the markets. Just wow. It's too beautiful.
And then Ross, I think you were kind of discussing this yesterday, that if you go back to the 15, it would be kind of difficult now to look for a buy after this.
100%.
Because of how the market, you missed the best move.
100%. You would never buy after this. Look, guys, how you make money, right, is through risk to reward. Risk to reward in the long run. Let's say you get into this trade down here. You get a decent entry or whatever, right? And you get into this trade. Look where you could be at. This is what's going to make you money in the long run, getting into the best trades. When you identify the volume kicking in. If you get into a trade after this candle closes, there's a very high chance that this volume is not going to push all the way to the upside unless there's some catalyst like news or whatever else, or the market conditions change. That means that your risk to reward cannot be as big as it usually is and would usually look something like this. Now, this means this is completely fine, but you're not giving yourself the best chance to make a lot of money and to overcome the losing trades and whatever else that you have, because you're always chasing small targets or taking trades later into the push phase, which means that you'll never get a stronger range. And that is going to have a negative impact on your risk to reward ratio, which is your edge. Okay. Do you always aim for TP in that one candle, or do you go for key levels? So Andreas, if I get a really good entry, then I would hope I get out in one candle. If I don't get a good entry, then I'll just hold it to my TP. If I feel like I've gone in a bit late, I'll go for a 1-to-1. If I feel like I can go for a key level, then I might go for the key level. If I feel really shit hot today and I feel like I want to hold it for longer periods, I'll go for longer periods. I haven't spoken to you guys how to get bigger risk to rewards out of these. And that is not something I'm going to be discussing on this masterclass. I'm just sharing the fundamental principles of this concept. And I want you lot to dig deep and do your due diligence to be able to identify what kind of targets you're going for. You can get stupidly ridiculous risk to rewards out of this. But I want you guys just to follow this process and to figure that part out for yourself based on how you feel, okay? You already been in buys before it closed. Nice example, playing it on UJ. I only get nice 50% retracement there. Great trade there. Great trades, V. Great trade. We spoke about this on this morning's live session, didn't we? If that candle turns green, even if the previous candle is red and you want to take the breakout above, take it. I hope that that looks like what you've done. And if you've done that, bro, freaking love you, man. Great trade. Great trade. I waited my whole London session to take a trade, nothing showed up, and now New York session market moving, but couldn't trade because against my trading plan. Don't worry, there'll always be opportunities. Let's take a look at another example. Yeah, definitely. Let's take let's take a look at V's trade here on a USD JPY. Would you guys look to take the buys after this candle close?
No.
What about after this one?
I would.
Yes.
Okay.
Yeah.
What about after this one?
Honestly, if they would come back far enough, I would.
No.
It's a tough one, isn't it? Because it looks really good as an example in hindsight. But you'd have to do a little bit of work to maybe figure this one out at the time. So you'll be anticipating USD to strengthen at 12 o'clock. So we want to see a bullish candle at 12 o'clock here. Oof. Wow, you did. Okay. You want to see a bullish candle at 12 o'clock as well. Yeah, guys. And this is what's crazy, right? I'll post trades and I wouldn't take any of these buys. And then all of a sudden I'll take a buy after this candle closes and everybody will question why I took it. Look at the time of this candle close. Look at the time of this candle close. Look at the time of this candle close, all at 12 o'clock, all in line and in sync, indicating USD strength. And what session are we coming into at this time?
New York.
Okay. So what would be the best way to take this trade?
Rox, that first bullish candle, I would have still highlighted it and then gone down to the lower time frame just to see how the structure was forming.
Good. To then do what?
And to see whether there's an opportunity for a buy.
Yeah. Okay. But would you have taken the buy as part of a retest?
Yeah. So if you mark that and if you go to the lower time frame, let's say the 5 minute on that one.
I know it exists.
Yeah.
100% know it exists. What I'm asking though is from this point. Remember, we're looking at this. It's already played out, so it's easy to say we would have done this. But I'm trying to just help you guys to really, like, challenge yourself when making decisions to take a trade. We've already identified at 12 o'clock that every single dollar pair, or at least the three that we've checked, USD, Swiss franc, and CAD, was pushing bullish and closed strong bullish at 12 o'clock. So which is this is the 1 o'clock close, right? But we've had other bullish candle closes in this range already. So why didn't we take a buy in between this range? That's a challenge we would get from somebody who criticized a trade that we would take here. What I'm trying to challenge you guys to do is think outside the box. This candle closed bullish at 1 o'clock. We have two significant confluences here to help support this USD strength. What else do we have? New York Open.
Oh, Rox, those other bullish candles, those are during high volume times, or?
Of course. This is 1 o'clock close, man. This is New York.
No, I mean the ones to the left.
Well, no, it's not, is it?
Right.
So,
so that's the added confluence.
So listen,
during
8 o'clock. But you look, 8 o'clock is high volume. 7 and 6 is high volume, right?
Okay.
But at the time, what we have to ask ourselves is, okay, let's do this. 6 o'clock bullish close. 6 o'clock bullish close. 6 o'clock bullish close. Now, you have to figure out at 6 o'clock on USD CAD and USD Swiss franc, was there enough bullish volume at the same time that this candle closed bullish to take a buy? I would say at the time, it looks like there was enough volume. So this is 6, closes at 7, this closes at 8. So if you wanted to take the buy after this, would this be wrong?
No.
Okay, you take a loss. Now, at 8 o'clock in the morning, you can see now that price is still failing to continue to push higher. We tried to break back to the downside. We're failing. 8 o'clock, do we have volume? Yes, we do. And at 8 o'clock, do we have volume? Yes, we do. If you wanted to take a buy here, would that be incorrect?
No.
No.
Okay. Now, where is the next opportunity to take a buy? The only next opportunity to take a buy is here during another high volume period. This candle at 12 o'clock closes bullish. This candle here at 12 o'clock closes bullish. This candle here at 12 o'clock closes bullish. Can you take this buy?
Yeah.
Okay.
Of course.
Fine. Now, let's say you take these or you don't take these, or you like these, or you decide to stay out after you lost this one, whatever your rules are. What is the best way to take this if you're not comfortable taking this within the range?
Breakout.
Yes. That is what I've been looking for.
Hey, like honestly, if I'm not fronting, like looking at that candle in the range, probably I'll just like look to the other peers and look if any one of them that you actually find the USD strength in looks much better, then I'll take that one.
Okay.
Compared to this one.
Fine. So then you were looking at 12 o'clock, 12 o'clock candle close. So this will, and that's a good point actually. Who just said that? OJB.
Yeah.
That's a very good point as well. If you see that the USD strength is strong and you're not comfortable taking this here, then what can you do? You just find a pair that you feel you are comfortable taking. Very good point as well. Brilliant point. Something like this. But let's say you were just taking this trade, or you wanted to take this trade. For some reason, you just were hooked on UJ. It was a pair you trade. What you can be doing in order just to make sure that you are safeguarding yourself in this trade, in this range, is say, well, look, I'm not going to take the 50% tracement, even though it looks sexy. I'm just going to wait for that momentum to shift. And what I'll do is just wait for price to break above, maybe a wick to the left, something like this. Anyone, it doesn't matter, guys. But I look for price to break above, because ultimately on the lower time frames, this is what? A structural high. So if price breaks above it, I get that momentum shift and say, look, I'll just target a structural high or whatever else. Granted, you're going to have a bigger stop loss, but what that does for you is that gives you an opportunity to make sure that the market is doing what?
Feeling your direction.
Correct. Fully in momentum. Now, when you come down to the 5-minute time frame and you look for this entry, you're looking for the breakout in the market for price to get past that area of traffic, which is this information here. You have options. You can place your stop loss below the hourly wick, or you can just simply work with structure on the 5-minute time frame, whether it be below the previous candle's wick, whether it be below the current entry candle's wick, whatever you want. It just depends at the time how you're feeling. Okay, your safest stop loss is always going to be below the hourly wick. Previous wick is completely fine, because if price trades below this area here, then we invalidate this structure. And if you pull it below here, then that just means that you're feeling super confident that the momentum is going to continue up if it breaks above this area here. Let me just draw this out again, too many lines. If it breaks above this area here, which is the current high. When we go down to the 1-minute time frame, the current high in the market is this information here, which is the 5-minute candle close. Wish it was clearer, but I'm sure you understand what I mean. Does this make sense, guys? This is the candle open and the retest if you wanted to take that within the range. I honestly, do you want the honest truth, guys? I honestly do not care what's happening to the left here. I really, really do not. And I've got so much more comfortable with doing this that if I get this information in a range or not, I'm only thinking of one thing. That candle closed bullish. I got the added confluences during a high volume period. I believe the next candle is going to be bullish, and this is the trade that I would take. No word of a lie. And it just really depends on what belief system you're carrying forward onto the right side that you've gathered from the left side. And if you want my advice, the only information that you're carrying onto the left side, onto the right side, after you've gathered that information on the right side, which is this candle has just closed bullish, and the next candle, I believe, will be bullish. There's nothing more you need to think about. Does this make sense?
Yeah.
Yeah. I have a question, Rox.
Yeah.
So at that time, yen was kind of strong as well because it closed bearish on EJ and GJ. Wouldn't that be like a red flag or something?
EJ and GJ. So So this again, you're gonna have to practice this. You know, it took me a long time to get to this stage to be able to do this. You're gonna have to feel it. Okay, you're gonna have to feel it. So let's say, what time was this? This was 12 o'clock. You've identified 12 o'clock close, 12 o'clock close. Fantastic. USD strength. Now, what was you talking about? Oh, USD yen. Sorry, beg your pardon.
Yeah.
So yen. So yen closed strong at 12 o'clock. Close strong at 12 o'clock. Then I would say, is pound weak? It is. And is euro weak? It is. Look, you know why this is difficult to gauge this scenario? Because this is a news inflicted move.
Oh, okay.
Yeah, but Rox,
That makes sense.
Yeah.
if
Hold on.
Yeah, go ahead.
But I tell you what I'm focusing on is USD strong. If I can identify USD strong, then that's enough for me. I don't need to look for the weaknesses. There's a great way to filter out the noise. If I can, so who was on the live this morning? V, was you on the live this morning?
Yes, sir.
All right. So we were trying to figure out weaknesses and strengths, weaknesses and strengths, weaknesses and strengths to try and get in a trade, because there was nothing conclusive this morning that was strong, right? But here we have USD strength, USD strength, USD strength. That is all you need. I wouldn't care about anything to the right.
Yeah, it looks so much clearer now compared to the morning. Like this is
100%,
so obvious.
100%.
Yeah.
100%.
Cheers.
But you need your question answered. You said, but yen at the time was strong as well, which is very true. Look at this and look at this. I would say, if it's conclusive and you can identify USD strength, you don't need to worry about what's happening on the right. If you need to make sense because it's not making sense, then you need to check for the weakness.
Yes, sir. I gotcha.
All right, go on. Who was that? Who just came forward?
Hey, Rox, but if JPY was strong, right? Well, as we've seen in the other pairs, and you actually have USD JPY here.
Yeah.
But the candle in which we are inspecting, that one closed bullish. So wouldn't that closing bullish show that USD is way more superior than the JPY?
Definitely.
All right,
Definitely.
cool.
So we would expect USD JPY to be going bearish here, going bearish here, going bearish here, going bearish here, going bullish here, going bullish here, going bullish here, going bearish here. Now, what do we see? Dollar is strong. You could have been hitting buys or sells on any dollar. Comparable to this morning, we couldn't figure it out. Now dollar is conclusive. It is conclusive that dollar is strong. And these are the market conditions you're waiting for, guys. Some days dollars will be strong, some days pound will be strong, some days yen will be strong, some days Aussie dollar will be strong. Aussie dollar was clearly strong this morning. This is called high probability trading periods, where you find high probability trading setups when you can read the market and understand it.
I have a question.
Hi.
If it is I wanted to apply this on US oil, what pairs do I look at?
Yeah, you come to the wrong mentor. I honestly don't know. You will just be looking, I think you'll be looking for the correlation, but this comes down to correlation and we're not doing correlation, but you will be looking at USD CAD. So if USD CAD goes up, oil goes down. If oil goes up, USD CAD goes down. I do not think that you're going to find enough evidence to help you with this one, unfortunately. You will just focus. I tell you the answer. Just focus on US oil like on its own, like I focus on gold on its own.
Okay.
It is its own entity. So
Hi, Rock. I have a question.
Okay, yes.
For two candle theory, suppose you are at a perfect setup and you want to enter, then suddenly you realize that there is a key resistance level over there, and by textbook you should stay away. What would you do?
Well, we spoke about yesterday in terms of ranges. You want to be managing your trade. You want to be managing your trade.
Okay, so it must be at least break even.
No, I wouldn't say it needs to be anything. But if because you are only anticipating the next candle to go bullish or bearish in line with the previous candle close. If there is a key level and you take the trade and price doesn't bust through it, then you just need to be saying, you know what, let me just close the trade if it starts turning around, or let me put this across to half. What we're trying to do here, Dr. Shah, is we're trying to not create too many problems or consequences. Rather, we're just trying to focus on really believing in what we believe in and then just executing based on that.
Okay, thank you. One more question. Let's suppose your trade is moving in your direction, and when it reaches 0.5 R, is it okay to move your stop loss to half?
Again, that is up to you. You're obviously asking me that question because of your experience. If it moves, look, the ideal perfect way to manage your trades is this. As price starts to move in your direction, you start to move your risk. And as it continues to move in your direction, you move your risk. This is the perfect scenario when trading, because we only want to see the market do what? Go in our direction. But do we do that? No, we don't. So it is down to you. If it goes to 0.5 and you want to go to stop loss half, and then it goes to 1-to-1 and you want to go to break even, and it goes to 1-to-2 and you want to take partials, that is fine with you. There is no right or wrong answer here when it comes to risk management, guys. Just make sure you recognize, you can recognize that when the market is not going in your direction, you close your trades. You guys fight the urge to hold your, doesn't matter, whatever. Let's move on. Does that answer your question?
Yes, I have a question.
Okay.
Yeah, my question is on gold. After realizing that USD is weak using the pairs and you went to enter into a trade of gold, can you use that information on gold and use the two candles here? Can it work also on gold?
Yeah, I trade gold and pound yen all the time using the two candle theory.
Okay, thanks.
But you're better off practicing the two candle theory on currencies first and getting a good feel for it, and then go into some of these other, like gold and oil and that.
Hey Rox, I got a question.
Hi.
Can you go to AUD CAD?
AUD CAD, yeah.
Yeah, on the 1 hour. You see, this and the previous candle closed bearish, right?
Yeah.
So can we look for sales now?
I don't know. It would make sense we can, but we have to see what's happening. Previous candle closed bearish, meaning I'm identifying Aussie dollar weak. I need to see Aussie dollar JPY previous candle closed bearish and Aussie dollar USD previous candle closed bearish. I see the previous candle closed bearish, so that could just mean USD strength. So now I need to validate that CAD is strengthening. I need to see CAD pushing bullish, and I need to see CAD pushing bearish. Okay, if you want to take Aussie dollar CAD, you can take Aussie dollar CAD, because we have evidence here of just slight Aussie dollar weakness and slight CAD strength. So scaling down, what you're now doing is you're identifying the area where that hourly candle closed, and then you'll identify the area where you want to take the trade. In this instance, the wick has been formed, so you're probably going to be looking for price to break this structural low, or if you're looking at it now, you're looking for price to break this structural low with a stop loss above this structure to enter the trade. This is how you'd enter. Again, I don't know that this is a high probability trading setup. I don't care to take a trade live, but what I am saying is that when I look at Aussie dollar CAD, I can see that Aussie dollar is weak, so that closed bearish, but this closed bullish, indicating Aussie dollar strength. So that cancels the Aussie dollar weakness. But then when I go to Aussie dollar USD, I can see weakness, but I know USD is strong. So it doesn't necessarily mean Aussie dollar is weak. So then I need to see if CAD is strong at the moment, which is showing signs of strength. So I can rely on the CAD being strong and Aussie dollar weak. And when I go to USD CAD, I can see the current CAD candle is bearish, meaning that it is fighting to go bearish. It would be better if this closed bearish to support the CAD strength, but it's there. So this, let's just say, is a trade that you would take 100 times and come off profitable. But in terms of wanting to take these all the time, because it's not a high probability trading setup, you probably want to make sure that the other things line up more better, if you know what I mean. Does that make sense?
Yeah, it does. Thanks.
Okay.
So this is like the B trade.
Yes, good. That's it. I was gonna say something like that, then it slipped my mind. So you're gonna have your A trades, your B trades, and then anybody who takes a C trade, I don't know what you classify that as, but this is
C trade is you being emotional.
Yeah, but this is definitely your B trade. Good, I like that. But I don't want to use the term B. Let's try and I'm going to figure something else out, make it sound sexy. But this is definitely not your A star trade or your A trade, okay? But it makes sense. And if you took it, it would never be wrong. Hi, Rock, can you re-elaborate when the two candle theory happens, but the current candle is lower time frame, didn't create a wick and immediately close strong into the same direction as the previous higher time frame candle? Is it fine to enter it immediately, or is it better to check the cross pairs across the board first? Then, so good question. But Daryl, you should have done your research before that candle's even closed. So before that hourly candle's closed, you should have done your research. The only way that it's going to change is if that candle drastically goes from being bearish, and then all of a sudden before the close, it quickly flies up. Then obviously it's ended. You're better off doing your research before, checking what's happening. And then once you get that information, then just going down to your 5 minutes, 5 minute time frame with that information in the back of your mind, locking in that candle's closed bearish. And now all you're looking for is evidence of a continuation of that bearish behavior. Does this make sense? Very good, V. Very good. Two candle theory has a massive emphasis on currency strength and the sentiment of the market, and identifying that there is momentum and volume in play. Because even though this is a B setup, we've identified that there is volume, but not as much as we would want because of just the slight discrepancies. But look, the market moves in your direction. You know what I mean? Now, it just because there wasn't enough evidence supporting the volume and momentum, it may mean that this would only go to 1-to-1, or it may just push down and then do whatever it's doing. But more often than not, if you've got this part right, you will get a move in your direction. And that is why I cannot emphasize enough, if price starts to turn against you, just close the damn thing out. Because more often than not, if you've got this right, guys, you will see the market move in your direction. I can promise you, but it will take practice. The highest probability one is when a currency shows signs of obvious strength or weakness. Am I right? Yeah, it has to be obvious. Take us through the process one more time. Okay, last one. Because we just done this one live, and we've done a couple others. So I'll do one more. All right. All you have to do is just go back and watch these and you'll get your answer. Let's go to one more. Let's go. See, look, that USD CAD help supported this idea here. But the only thing that threw us off is this information here. All right, let's go through one more process. Let's find. Let me ask you guys something. I'm not going to do the confluences and whatever else, but let's say this closes bullish and this closes bullish. Can you take a 50% retracement here? Dave.
No.
Yeah.
Yes. Last one was bullish.
Last one was bullish. Would you
I
take
take the breakout?
Good. I just want to see if
Yeah, I'll
guys,
take the breakout.
good. I just want to see if you guys are on par with how we were thinking with the previous example. Okay, good. So we just look for a breakout here. Let's say you take the 50% retracement for whatever reason, price pushes up and then it comes back and stops you out. What does that mean?
It's just
It was just a losing trade.
Yeah, Let's go. All right. Okay. And let's take a look. I think we've covered the markets. It's going to be tough looking for yen is strengthening. Yen is strengthening. So what's that mean for that Aussie dollar CAD? All right. I think we've covered the market, guys. I mean, honestly, I think we've gone over every single pair. Does anybody have any questions? Is there a bunch of discrepancies? Is it better to walk away? Absolutely. Look, this is this simple. You're trying to identify strength or weakness and understand the sentiment of the market to see if there's volume and momentum at the time you're about to take a trade. If you cannot understand what's happening, then that means that there must be discrepancies. Because when the market is working in tandem or moving in tandem, guess what? It screams out to you and it tells you that it's what it's doing. Because all the candles are in sync, they dance together and move together. This is why I can't stress enough. One more example of a breakout entry.
I think you have a breakout on CAD JPY. Not sure.
And this one here?
Yeah, the current one.
Okay, cool. Yeah, you do. So we identifying CAD strength at the time when looking at Aussie dollar CAD and USD CAD there. USD CAD. Yeah, at the time, yeah, USD CAD. So this is going to be obviously an immediate breakout trade here. We have evidence of price breaking above this level. We're not worried about this key level, as I've mentioned to you guys already. And now we're scaling down to the 5-minute time frame. We're isolating the area in the market where that previous Audi candle closed, which is this information here. Here you have an area in the market where price has now, why is that giving us, why is that level here? You have an area in the market where you can see, sorry, the 50% area in the market. You're looking for price to come back anywhere in this area to create those signals or give you those signals. Bullish engulfing, bullish momentum candles, indecision candles, or wick rejection candles. And if you don't get it and you see that the candle is starting to push bullish, creating this wick, which is the bottom wick of the current hourly candle, then you'll be looking to take the trade something like this. That is it. So you're isolating the area where you think price is going to break above, which is an intraday high. So if it breaks this, it makes a new higher high. Or you identify the wick's been formed. You identify the momentum in the market at the time that you're seeing a sentiment of CAD strength at the same time. And then you're saying to yourself, well, I feel that there's a lot of volume in the market, so it may not pull back to give me this. I'm just going to enter when the candle turns green with the stop loss below and go for something like this. You're only going to get better by executing, but hopefully that makes it clearer for you. Okay, things keep getting simpler and simpler in every life we are taking with you, Rox. I even feel like I'm no longer scared. Good, that's how you're supposed to feel, Noah. I want every single one of you to feel that way. It is not going to be easy. Let me not lie to you. It's going to take some effort to build the confidence that you need and the faith that you need to keep going when the markets are bad or even when you take the best trades. But I can promise you guys, I honestly just don't believe, and I say this as humbly as I possibly can, that trading can get any simpler than this. And you know why? Because a candle has to close bullish and a candle has to close bearish at some point today. And that is it. Any other questions?
I have a question.
Go on.
Far as back tests this strategy, I know
it's almost impossible.
Okay.
Unless you're using software Forex.
Okay. Okay. All right. Thank you.
You don't need to back test. Just come to your charts, find the red candle, ask yourself, did the next one close red? Go bish, bosh, bash. It doesn't need to be during your, yeah, it could be during your trading times. Bish, bosh, bash, scale down, figure out how you could have entered that trade and say, do I understand this entry? And could I take this live? That's your back testing. You're just trying to reinforce one simple thing. If a candle closes bearish, can the next candle close bearish? And the answer is yes.
All right, I got you. Thank you.
Anytime you see this, don't even worry about it unless you're really trying to collect raw data. Guys, none of you should backtest this. That's my honest truth. None of you should backtest this or waste your time backtesting this. Just get in the live markets and forward test and forward test and forward test, because you need to really feel and prepare yourself for when that volume and momentum is kicking in. And the only way you can do that is by forward testing. You're not going to get it, because this strategy heavily relies on the market sentiment, volume, and momentum. Then we simplify it using the 2-candle theory. Oh, sorry, and currency strength. And then we simplify it with the 2-candle theory. Get in the live markets. Okay. Brown boss, yes. What's up, sis? Huh? Can I do US 30 tomorrow? Oh, hell no. That is not me, man. I don't trade US 30, and look, I just want to say I don't know what will correlate with US 30 either. But I just want to say this: the 2-candle theory is the 2-candle theory. It can be applied to any symbol of your choice. You just have a greater chance of getting into high probability trading setups when you can add confluences. Nonetheless, if you trade the 2-candle theory, you can just do it without the confluences. It just means that you just have less. What did I just say? You could trade US 30 without the confluences. It just means you won't have the confluences. Yes. We could definitely take a look at if it's going to boost your confidence, and we'll do that tomorrow. But I just like I said I can't remember, somebody asked about oil. It is just the same thing, just as much as it is the same thing with gold. Okay. Hey, I'm not going to repeat that again, buddy. I've gone over it quite a few times now. I'm going to wrap this up, render this, upload it for you guys to watch back. 1 hour, 5-minute traders. I hope you enjoyed this. Hope everybody enjoyed this. Again, it's just the same thing, just using 2 different time frames. Tomorrow we'll be back for the 15-minute, 1 minute to wrap up this week. Then we'll take any questions, and then it's down to you guys to apply yourself over the next 90 days to really make this work. Okay. Thank you guys for your time. Take care, and catch you very soon. Bye-bye for now.
Thanks, Rox.
You're welcome.
Thanks, Rox. It was power, bro.
Good man. Thank you. Take care.